Welcome back to the deep dive, where we take that huge stack of international rules and, well,
Yeah.
all the advice out there, and we just cut through the noise to give you the essentials. Today, we're digging into a concept that has just fundamentally shifted for anyone working globally. Entrepreneurs, digital nomads, living abroad successfully. For so long, the strategy was, well, pretty simple.
Oh, yeah. Move somewhere cheap, find a couple loopholes, and just kind of wing it when it came to your taxes.
Exactly. And that whole approach.
This is now defunct. I mean, it's just not going to fly anymore. The whole landscape is digitized, which
Yeah.
means compliance it's not optional.
Right.
So our mission today is really to unpack this new expat rule. We're talking about why careful planning, absolute consistency, and focusing on the legal reality, what we call substance over formality, are so essential now.
Especially if you're looking at those really popular regions like Southeast Asia.
Absolutely. This is a critical deep dive because the core message really is that just picking up and moving isn't enough to change your tax status anymore. The financial world is tiny now, and the net is. It's incredibly wide.
It's the essential context, right?
It is. Governments are sharing vast amounts of financial data. Think about things like the Common Reporting Standard, or CRS, which we'll get into. Tax authorities are sophisticated, and they are actively looking for non-compliance.
So moving your body doesn't automatically move your tax obligations.
Not at all. Your liability is now rooted in where you genuinely have your strongest economic and, personal ties.
Okay, so let's really unpack this shift. We have to completely dismantle this myth of the 183-day rule because it's such a distraction.
A huge one.
And we need to get our heads around this much bigger concept of habitual abode and why a shiny new digital nomad visa, while great for getting in the country,
Has absolutely zero to do with your tax status. They are, as one of our sources put it, entirely separate beasts.
Okay, let's jump into that. The Great Shift. It really feels like the whole expat game, if you can call it that, has gone from this spontaneous improvisational act to something that needs, I don't know, deliberate engineering.
That's the perfect way to put it. Engineering. The days of a vague plan and a couple of stamps in your passport being enough are just. They're long gone. The consensus among global tax experts is that preparation and consistency are the new keys.
It's not about finding a clever temporary loophole anymore.
No, it's about building a life that is legally and practically defensible, not just for next year, but for the next decade.
And what really stands out to me here is how the focus has moved from, aggressively trying to get your tax down to zero and more toward building actual stability.
Yes, this idea of constantly moving to chase the next tax break just to stay one step ahead is, well, it's unsustainable. And frankly, it's incredibly stressful.
So what are people looking for now in a destination?
It's fascinating. The criteria have really evolved. People are now prioritizing things like reliable infrastructure, good health care, and clear, predictable residency rules, often over just the lowest tax rate.
Because a life lived on paper just doesn't work.
It collapses. The moment real life intervenes,
Yeah.
you want a family, you want professional consistency, any artificial setup is going to fall apart. You need permanence. You need proof of life.
So if permanence is the new goal, how do the strategies change depending on where you look? I saw Central America and the Caribbean come up, still offering territorial tax systems.
Right, so they don't tax your foreign-sourced income.
Yeah.
And there are still very strong options, often with pretty accessible residency paths. But this is where people get tripped up.
Okay.
The income has to be genuinely earned and managed elsewhere. If you set up your main business operations, if you hire local staff, or you're actively doing business in that new country, you could create what's called a permanent establishment
Which immediately triggers local taxes.
immediately.
Mm-hmm.
Even in the territorial system, it's about where the management happens, not just where your clients are.
But hold on, if it's a territorial tax system, why does it matter where I'm managing the business from? If all my clients are in the U.S., isn't that foreign income?
But this is the nuance. It's about the source of the income.
Yeah.
If you're physically sitting in an office in Panama, directing the business, making decisions from there, well, the Panamanian tax authorities can argue that the fundamental source of that income is Panama.
Regardless of where the client is.
Exactly. You need genuine detachment from the local economy.
And what about Southeast Asia? It's the biggest draw for lifestyle, for sure. But the sources we looked at are crystal clear. The rules there are getting very specific, and they're constantly changing.
Constantly. It's a vibrant, competitive region, but that dynamism means the rules are fluid. We've seen huge shifts recently in places like Thailand, Malaysia. They're all tightening loopholes. You just can't rely on advice from 2 years ago. Not anymore.
Which brings us right to the core of this. rethinking residency. This,
Right.
this substance revolution. Let's just take direct aim at that 183-day myth. Why is counting stamps in a passport not the answer?
Because it's just too easy to game. The tax world has moved way past the calendar. Now, don't get me wrong, 183 days is still a factor in many countries' laws, but authorities are now looking for proof of real ties.
Substance.
Substance, not just a temporary physical presence.
Okay, so let's get practical. An auditor from, say, your home country is looking at your file. What are they actually looking for to prove these real ties? What is substance over formality?
They want to know where your life is actually centered. They scrutinize your daily life. They're asking, where is your true home? Your habitual abode? Where do your kids go to school? Where's your dentist?
The mundane stuff.
The most mundane stuff. Where are your cars registered? Where are your main bank accounts? Who are your closest personal and professional connections? All these little details paint a really clear picture of where your life naturally centers.
So if I leave my golf clubs and my winter coat at my parents' house in my home country, and I can technically sleep there whenever I want, that could be a tie.
That could be a very strong tie. This habitual abode concept is powerful.
Mm-hmm.
If you have a home that is always available to you in Country A, even if you spend 10 months of the year in Country B, Country A can argue you're still a tax resident there.
Because of that available home and those deep ties.
It's a layered test. You have to break those ties cleanly if you want to rely on the rules of your new home. This is where physical presence and your legal status have to line up. The old tricks, the quick flight out of town every 180 days,
The collapsing.
they're collapsing under this global focus on substance. And that leads to the big call to action for compliance. You have to get meticulous.
You mean like keeping records?
Robust digital records, proving where you were, sometimes down to the day, separating personal and business finances, documenting where your business decisions are being made. Your whole strategy has to be current and instantly defensible.
Let's spend some time on Southeast Asia specifically, since it's such a huge focus for so many people. We know it's popular, but the tax frameworks are getting more complex.
They are, and Malaysia's a really fascinating case study for territorial tax.
Yeah.
The principle is great. You're generally only taxed on income you earn inside Malaysia, but the devil is in the details.
Right. What are the biggest nuances that a remote worker or an entrepreneur there needs to be documenting to stay on the right side of things?
Okay, 3 major pitfalls. First, even if your income is foreign sourced, bringing that money into Malaysia to spend or invest, that can be an issue. There are specific rules around remittances you have to follow.
Pitfall 2.
If you run a business, even with all overseas clients, setting up a physical office or hiring a local employee can create that permanent establishment we talked about, and suddenly your business owes corporate tax there.
Even if you personally are following the rule.
Exactly. And third, the burden of proof is always on you. You need meticulous documentation proving where the funds came from and, critically, where the management activities took place.
So the real goal here is to set up a strong, stable physical base that supports your life and satisfies that substance requirement, but without locking you into something so rigid that it messes up your tax status.
That is a key part of the puzzle. If you're building a compliant life, your accommodation has to reflect some permanence and professionalism. This is especially true when you're just testing the waters in a new country.
And we're seeing professionals and entire corporate teams turning to more extended stay solutions.
For sure. And this is why options like service departments are really coming into the spotlight now, particularly across Asia Pacific.
Right. They seem to tick a lot of these boxes.
They offer huge practical advantages for a compliance strategy. First, there's the flexibility. You can adjust your plans quickly if the local rules change or if you decide a city isn't for you. Second, the convenience.
Already furnished, services included.
Everything's included.
Yeah.
Cleaning, maintenance. It just reduces the hassle so you can focus on your work and, more importantly, on keeping your compliance records straight.
And for someone new to a country, it immediately helps you address that habitual abode test without having to sign, a 2-year lease on day one.
Exactly. For stays of a few months or more, they're often highly cost-effective compared to a hotel, but with way more stability. And that stability is what tax authorities are looking for. Your choice of accommodation is a real, integral part of defending your economic substance abroad.
Okay, let's switch gears and talk about some common pitfalls. These are the little assumptions people make that can just snowball into huge, expensive problems. Pitfall number 1, the cost of living confusion.
This is like a classic one, a total cognitive trap. You assume that because a country is cheap to live in, cheap food, low rent, that the taxes will also be low.
And they're often totally unrelated.
Completely unrelated. You could be enjoying a very affordable lifestyle, but get hit with surprisingly high income taxes. You have to analyze the tax laws specifically, not just the price of a coffee.
Okay, pitfall 2. We touched on this, but it really needs its own spotlight. Assuming your visa equals your tax status.
This creates so much trouble, especially with all these new visa categories popping up. Immigration rules are about controlling borders. Tax rules are about your financial ties.
Separate beasts.
Entirely separate beasts. A digital nomad visa gives you the right to stay, but if your family, your main assets, or your U.S. LLC's contracts are still based back home, your home country is very likely going to argue you still owe them tax.
Can you give us a real-world example? I know Vietnam came up in the source materials.
Sure. In Vietnam, for instance, you might become a tax resident just by staying 183 days. So you're there on a visa, working for your clients back home. But the U.S. still requires FBI reporting. Your home state might still claim you're domiciled there.
And you could end up being a dual tax resident.
Liable in both places, even with a perfectly valid visa. The key is understanding how your home country views your departure. You have to cut the ties.
Pitfall 3, and this one is genuinely terrifying, is ignoring international reporting. This is the silent killer. It leads to massive penalties, even if you owe zero tax.
Oh, absolutely.
Yeah.
We have to talk about FBAR for U.S. citizens, the Foreign Bank Account Report. If you have a total of over $10,000 across all your foreign accounts at any point in the year, you must report it.
And the penalties.
They are severe. And they're not calculated on unpaid tax. They're calculated on the existence of the accounts. It's a paperwork violation, but a highly, highly penalized one.
Okay, so this brings us to the future of all this. The reason these rules are all tightening up, the Common Reporting Standard, or CRS, what does that actually mean for someone listening?
It means total visibility. Tax authorities have an unprecedented view into your financial life abroad. Over 120 countries have signed on, meaning their banks automatically share your account information with your home country.
Automatically.
Automatically. Your balances, interest, investments, you don't even have to file a local return for this to happen. Just moving your money to an overseas bank doesn't hide it anymore.
So the old school tax havens built on secrecy are finished.
Completely. Those places are now required to show real economic activity to avoid being blacklisted. If you're going to live abroad, you have to build a legitimate, defensible economic life there. There's no hiding anymore.
So if we synthesize all of this, what's the one core takeaway? The consensus seems to be that the new global normal requires the expat to be smart, organized, and very proactive.
That's the heart of it. Long-term, low-stress success abroad demands intentional stability over constant motion. It's about building a life that feels both free and secure, where every single piece, your home, your finances, your visa, your business, it all lines up.
It has to tell a consistent story, a story that makes sense to a skeptical auditor.
It does. It's about moving away from chasing these fragile temporary advantages and toward creating a durable, honest life overseas.
A great way to frame it.
Well, we'll leave you with this final provocative thought. Given these automatic information exchange systems like CRS and this intense global focus on proving economic substance, just ask yourself this. How would your entire financial and physical footprint hold up if a tax authority decided to audit your life tomorrow?
Wow.
It's not about finding the next loophole. It's about being deliberate, being organized, and being transparent about your mobility from day one.
That is fantastic insight and exactly the kind of foresight you need in this environment. Use this knowledge to build your life abroad on the most solid, defensible foundation possible. That's all the time we have for this deep dive.